Good afternoon, my name is Carlo Heyt and you're watching the final video assignment for TDFA. I'm a fourth year international business student here at the University of The Hague, so let's jump right into my final assignment. So the subjects as I've chosen for this final assignment is the subject investment from week 2. This is actually the main thing why I wanted to get into this course. I didn't know anything about investment, I didn't know what was trading, what was investing. I just know you can invest in your house and that's pretty much it. So that's something I really wanted to learn. Then with investment, I think the main things I've learned is the fundamental analysis of week 3 and of course the technical analysis that you do to see what a stock is going to be worth. So these are the 3 subjects I will be using, so please enjoy. So the first subject will be investment. So the question, what is investment? Here is a quote from Investopedia. So it's developing capital to work projects and activities that are expected to generate a positive financial return over time. That is the very, very hard definition of investment. Yes, so as said, in this series we're going to unveil the indicators of the world of investments. We're going to go to the fundamentals of it and also explore some types of investments. Besides that, we look at some strategies that you can fit to yourself or the best for your business. The world of investment is quite vast and various, right? It offers everybody an opportunity to grow their capital, to protect their future capital, and if possible, get financially independent. I mean, that's your main goal to invest. It doesn't matter if you're a beginner or an expert, there's always something for everybody to learn in investing. Yes, so trading versus investment. Well, sometimes they are interchangeably used. They are quite polars of each other, right? Trading often revolves around short-term movements in the market, aiming to capitalize on these fluctuations. In contrast, investing, it takes more of the bird's eye view of it, right? So it focuses on long-term capital appreciation. Imagine a trader as a sprinter and an investor as a marathon runner, right? They're both runners, but their strategy and their goals is vastly different. What you want to have, ideally, is mastering a balance between both of them. This is the best strategy you can have as an investor and trader. So let's talk about the allures of the trading. So trading offers a real-time pulse of a market. It's like being on the front line. Every decision that you make will be straight away a win or straight away a loss. It's quite thrilling, but it's also a platform where you need a lot of self-awareness for. The market doesn't care about your emotions. The only thing it rewards is a good strategy, being disciplined, and adaptability. As a trader navigates this environment, it gains more insights of which he grows. And therefore, the more he does it, it will impact his investment success in the long term. So then the question, why invest? The question has multiple answers. Firstly, there's inflation, which silently cuts down on someone's purchasing power, right? So if you're not investing, you're essentially losing your money. Then there is the compounding effect, often referred to as the 8th wonder of the world. Compounding can be visualized as a snowball rolling down a hill, right? So it gathers more snow as it gets momentum. Your investment works the same. It will grow exponentially over a period of time. Take the following example, the impact of inflation. Inflation takes quietly the value of your money away. Think of it in this way. So if you have 50,000 euros today with an average of 3% inflation yearly, you will have in 10 years the same buying power of only 37,000 euros. This shows that investing is the way to battle inflation. By making sure it's not declining 3%, you want it to actually incline 3% by returning something from your investment. When diving into investments, you do not need to start from scratch again. Many already walked the path before you and they left behind some wisdom in that case. Bill Ackman, he simplified, for example, finance and investments through a very brilliant lemonade stand analog. It pretty much highlights the fundamentals in a relatable manner. Ray Dalio provided an insight into the interconnectedness of economic elements that offered a macro perspective of it. Others, such like Professor Naval Ravikant, I think it's like that, guides a lot on strategical financial plans and the power of passive income, which is a great one to consider when investing. So it looks to the types of investment. Investment comes in 3 types. Growth investment. This is for the risk takers who want to invest in a company that might not make money now, but could grow later. Value investment, if you want to have a more stable path. Those who look for undervaluable things and are good track records, so you can grow very slowly. And income investment. This is if you have regular money, then you think of bonds and stocks that you can buy individually. So they give you a steady return as you keep putting money into them. So investing is not just about one thing, it's about making different things work together. So think of it as a band where every instrument is an investment and has a role. When they all work together, you get great results like a beautiful song. So mastering portfolio management gives you multiple intakes, which provides a very nice and steady investment plan over time. Speculations versus investment. Well, both involve putting money into an asset with the hope of profit. Speculation is more like gambling. It's a high risk and high potential reward. Investing, on the other hand, is more methodological. It relies on research, analysis, and long-term perspectives. Knowing where you stand on this spectrum is vital for your investment. So, adopting in the market dynamic. Markets are living entities, they are continuously evolving. So, the ability to adapt is quite important. For instance, is the COVID-19 pandemic. Many sectors were shocked, but there was also a birth of a lot of opportunity. I mean, companies like Netflix and Zoom, they catered to the new normal and saw therefore exponential growth. What was the key takeaway from this? You need to be agile, you always need to observe, and need to be ready to pivot at any moment into a new market. So looking at some of the titles in the industry, why would you start from scratch again if you can look at some investors already? Successful investors over the decades have quite a lot of experience and crafted certain strategies you can use. Some of these strategies are the cost dollar average or the index investings. There's a wealth of knowledge to tap into, right? It's very noteworthy that the people below here on the picture, those are Stanley Duckmiller, Howard Mark, and Ray Dalio. They often give very valuable insights. By studying their approaches and adapting to them and integrating them as well into your own strategy, you can create your own pathway to financial success quite easily. So what are the takeaways and what's the journey that we have ahead? Investing is really a commitment to your future self. It's a way to put your money to work and make sure you can get financially stable into the future. Brick by brick, you build your financial fortress. That's what you can say. Because you work on yourself, you make sure you're future-proof for future circumstances. By staying curious and also continuously growing, you learn more, you learn to make better investments, and you keep building onto yourself. Then subject 2, I chose the fundamental and sentimental analysis. Fundamental analysis by Investopedia. It's a method to determining a stock's real or fair market value. And that's where we're going to dive into. An introduction to the financial market analysis. We're going to explore the tools that we have to make a financial decision. Think of a financial market analysis as a guide through a maze of investment choices. We'll dive into the fundamental and to the sentimental analysis of it, which are like a treasure map that will help you to your new investment opportunity. So the 3 pillars of an analysis. In a financial market analysis, we have 3 main ways to understand things. A fundamental technical, a sentimental analysis, with each has a different pair of glasses on to give us a unique view of what we are going to do. Today we're going to focus mostly on the fundamental analysis, but we also do a small peek into the sentimental analysis as it has to do with the emotions that you get to a certain market. So going deeper into the fundamental analysis, when we talk about a fundamental analysis, think of it as a deep dive into a company's health. You look at the financial statement, at the strategies, at the competitions, and even the big economics. So what's the goal of it? It's pretty much to figure out what's the real value of an asset. As it's like peeling back an onion. Layer by layer you see what's actually in the company, and therefore you can see if the pricing is too high or too low, or if it's just the right price for you. So some key parts from the fundamental analysis is that the fundamental analysis is based on 2 main parts. You have the quantitative and the qualitative analysis. The quantitative is all about the numbers, right? So what's the sell, what's the debt? While the qualitative, it divides more of the less tangible stuff. So it's like the company's reputation and their leadership. And all of it together will give you a picture of what is the potential of the company. That's the things that you have to weigh out. The financial ratios is quite important. So in the fundamental analysis, the financial ratios are like the key of understanding. These ratios come from the company's financial statements, what tells us about their profits, about their debt, and how they use their resources. Do remember that it's not only the ratios that matter, or only one ratio that matter. a company might look good in one area, but not so good in the other one. So only taking all the ratios you see on screen together gives the real story of the company. So what's the impact of a visionary? What is it if you want to look further than the numbers? So in the world of investing, people matter a lot too. We all know these two gentlemen on screen. They're Elon Musk and Steve Jobs, right? They have some very successful companies as their visions were big. Their decisions really shaped the whole of the industry. They go beyond making money, they actually change the world. And these things actually in the end also bring value to the company, which you as an investor will gain from. So let's shift gears for a second. Let's venture into the more relevant and newer realm that is taking over the financial world by storm, the blockchain and cryptocurrency. Blockchain is the technology that underpins the cryptocurrency. So it's one of the most disruptive and revolutionary ways that we can make transactions with each other. Within this framework, cryptocurrency is like the tangible asset. So it has unique values to that property within the blockchain. So understanding and evaluating a cryptocurrency. So how can we find out what is the worth of a crypto in the sometimes big and crazy world of the digital money? Well, just as a regular investing, there's a special measurement of this. These measurements, along with the knowledge of the technology behind the cryptocurrency, is quite valuable in helping to understand what is the cryptocurrency worth and what is it going to be worth in the long run. So decentralization, that is the power shift that's going on. One of the core tenets of a blockchain and cryptocurrency is the principle of decentralization. Instead of a central entity holding the power and control, the blockchain distributes the power and shifts the profound impacts through a more transparent, efficient, and decentralized system, which in the end of the terms is going to be more democratic than the current financial system. So venturing beyond the numbers and technology, we touch upon our human emotions within the sentimental analysis. So every investor, whether they're trading stocks or cryptocurrency, is driven by a complex web of emotions, beliefs, and also their perspectives. So the sentimental analysis aims to capture the emotional undertone and offer insight into the market movements that the numbers cannot always reveal. So what are the tools and indicators of sentiment? Sentiment can be quite hard to measure, but there is a tool for it. So you can use this to indicate the track of your emotions, like for example fear or greed, or on the platform by, for example, gathering the opinion of some experts. By understanding your sentiment, you can make a better prediction about the market. Yes, and now we came to the third subject, the technical analysis. Here you see also the third description of Investopedia. So a technical analysis, a method of analyzing and predicting stock movements based on past market data, previous pricing, and the volume of it. Yes, so we're going to break down the world of stock trading and the technical analysis with a comprehensive look at ASML. You might ask, why ASML? I actually got my internship in ASML. I'm going to start this November as an operations supply chain intern. So it's actually really fun for me to already look at the company, see what they do, what are the numbers. So that's why I chose it, because I really would like to see more of it and also how to do financially. What do you have with the technical analysis? Well, think of it as a roadmap, right? Guiding us through the twists and turns of the stock market. And the case study in this case is going to be ASML. So when you walk over, for example, a big road, you look what's been behind you and you see what's in front of you. This is pretty much what a technical analysis does, right? It shows what's been behind us, as now we're going to see what's going to come ahead of us. So now let's look to the analysis that I did from ASML. I did analysis from October 2022 to October 2023, and for this I looked on a weekly base. So let's unpack what we see over here, right? So let's go first to the patterns. You can see that from October 2022 right until February 2023, ASML stock were rising, quite some actually, and then it's really had a very steady uphill peak, right? Because from post-February, it took more of a moving pace, right? It went more horizontally than vertically. This is a side-to-side movement, and it's often a sign that the investors are taking a time to weigh their options, so to feel the stock, what's going on with them. We see a very clear floor and ceiling in this. So a stock has a playground. At highest points it can jump is the ceiling, and at lowest points it can sink is the floor. From ASML, the ceiling is at the point of 680, and the floor is a safe zone right between 580 and 600, and between there is the trading activity. So when we go to the trading activity, you can see it the same way as when there is a big sale in the store, right? If there's a big sale, there are a lot of people coming there. It's the same way with stocks. So when you sell or buy a stock, you are spikes in activities. And for ASML, during major peak shift, there is a lot of shared activities. So that's indicated there's a strong interest in the stocks of ASML. So if we're gonna look, if we had €1,000, how would we navigate this road of ASML? So what will we do in investment? So we're gonna highlight an entry, an exit, and a stop loss value in this. So the direction, that's the first we start with. It's gonna go up and down. So ASML trends, it's bouncing back in its lower limits. And I guess it might go upward again. So our strategy leans towards buying in that case. So when to buy, that's the next question. So we set our signs about 605. I mean, that seems smart. I want to wait until the right moment that it's going up again to really catch it and then go into the elevator up. It's near the floor, so that's good because that means it's most likely to go up again. The setting is selling targets. I will set it around 670. I think this is the checkpoint because before that it's gonna get to the ceiling again. So if you just sell before that, you get the most gain because it's gonna go to the ceiling and then mightly drop down again. Safety, I think it's not a super big chance in terms of safety. So therefore I just put it back at 580, so the minimum. The loss is then also not that big as 25. I think that's the right risk to take. How much to invest? So based on the strategy that we were given of €1,000 budget, let's look at closing about 0.8 in shares. So when you pull it all together in this technical analysis, it really gives us a chance to look into the stock. So what I did before. So because I know the ceiling, because I knew the floor, this is how I want to put in the stock, that my risk is now at 0.2, but what I can take is actually more. And therefore, I think the stock is going to go up and give us actually very, very good interview on what's going to happen. So I'm going to keep the stock and going to see what happens.